Wow, you mean I've been talking for so long and you guys didn't hear what I said? That is spectacular. Okay, I'm going to have to repeat myself. This is embarrassing. I've been talking for about 5 minutes now and I didn't realize there was no sound. So, first of all, students, please, students, please let the people in the Telegram group know that we're on YouTube, not Zoom today. Thank you, Ivy. So we're on YouTube, not Zoom today. So they should come on YouTube. This is a public forum. Talkbar's not here today. I was explaining that he's doing something with family. So you got me on Monday on YouTube for the first time in about 2 months. I have been off YouTube because I've been working with our students, and I was showing you what we've been working on, what the Israel Keys Wealth Academy looks like behind the scenes. So what you guys see on YouTube is like a fifth of all the stuff that we actually do behind the scenes. We have a pre-recorded course we're releasing to our students. We're doing hands-on mentorship. We have almost every day a mentorship session: Monday evening, Tuesday evening, Wednesday evening, Thursday evening, Friday evening, the Sunday evening Traders Lounge, dealing with psychology and stuff of the like. And the Mastermind Inner Circle launching hopefully in the middle to end of November. At the moment, you can get in for $89.99 a month. It's gone up by £10. Yes, we warned you it would. Once we get to November, it's going up to $129.99. You won't find anything like this value anywhere. But that's why I've been off YouTube. I've been working with our students privately. We've got some of the students in the comment section. Guys, let the people know whether or not you think the Israel Keys Wealth Academy is worth anybody's money or time. So I'm just going to let the guys know. But that's where I've been. And also, you will notice that as we deal with some of the stuff we're dealing with today, if you are not a registered student, you might find a little bit of a gap because there's some stuff we've been teaching behind the scenes that we are not in the free YouTube videos that we now apply to the analysis sessions with our students. We're going to give you guys just a little bit of a tip of the iceberg, if that's okay. So without further ado, let us begin. Let us begin. Okay, let's go. So, last week, we ended the week with a couple of signals on EU, GU, and UJ. For instance, let's see now. Let me see if I can work this out. I want to show you what it looked like in our Telegram group, Inner Circle Telegram group. Give me a quick second. Let's stop sharing that. Let's put that up instead. And let me reshare the screen so that it picks up anything on this side. Good. Cool. So I'm going to shift because some of these screenshots, I have lost them. However, I can get them because we put them in the Telegram, in the gram. Cool. So here we go. Excellent. So that's our analysis and results board. Right. So where did we start from? Cool. I think it was here. Nope, not there. Where did this start from? Okay, there we go. So this is on a Tuesday, as you can see, 8:45 a.m. in London. You can see that at the bottom of the screen. 8:45 a.m. in London on a Tuesday. I sent out this chart saying something significant happened at that level. So on a Monday to open the week, again, I'm not going to go through the entire framework of it, because first of all, I'd be cheating the guys who paid for it. But secondly, there's just not the time. But significant level, weekly low from the 27th or the 30th of July. We got there. And this happened. So that brown line there is that weekly low I just showed you. And as you can see, we had a stop hunt and a market structure break. Price took out the low of the previous day. So on the 21st of September, that was a Monday. Price took out the low of the Friday and then took out the high. So that is the 1 hour picture of what we were drawing attention to in the group. So we stuck a Fibonacci in. As at the time this went out on Tuesday morning last week, this is what it looked like. So this is what you get in our as part of our inner circle groups, our mastermind groups, and our VIP mentorship groups. Live commentary as this is going on. But there's a reason I'm showing this to you, because this same principle applies to a couple of pairs this week. And so that was the low of the Asian range on Tuesday morning. We stuck a line out there. And if you look at this, I wrote watching that level, meaning that is where we expect the magic to happen. Did the magic happen? Yes, it did. It happened to the tune. No, that's not. 1 second. That's not the one I'm looking for. Yep, that's it. So it happened. We got in the trade there. This was the trade while it was already on the way. But that's the exact same trade. You see, that's the UJ. That was the Monday that took out the low of the Friday and the high of the Friday, came back, took out the low of the Asian range and popped up there. Of course, we rode through the trade at the time. That was what it was doing on that account. And then we tracked that trade. 1 second. We tracked that trade through the day. At that point, wait 1 second. No, these are just some of the results. That was the next day. We tracked it through the day. We closed it up here. And then the next day, we literally took the same trade. So we got out of it on Tuesday. We hopped back into it on Wednesday. As you can see, the target for Wednesday was 105.54. 1 second. I'm trying to control this. And then we took a similar trade on EU. Again, I'll show you that. So this was on Wednesday on EU, as you can see. That was the entry. That was the stop loss there. I'm looking for something. Let's see if I can find it here. So this is the progression. Again, all this was documented while we were in the group. UJ was going up. That's not what I'm looking for. Anyway, this was the close of both trades, the JAPI and the Euro dollar. Don't be jealous. It was a very good week for me personally. Right. I think I found it. This is what I'm looking for. No, not that. This one here. No, that's GE. I'm going to show you this week. There it is. I believe this is it. Okay, cool. So this was the overall analysis on a daily chart. That same trade I just showed you, those levels were on my chart from the start of the week. I didn't share it with the group because I wanted to show them the tracking through it, but that brown line is that weekly low from the 30th of July. The entry is the top or the bottom green line. And then the exit, the final exit for the week, was the top or the bottom of this candle here. Now, if you've gone through the free stuff, the free videos we put out on this channel, everything you need for this trade was given to you in the free videos that are right now on this channel. But I want to draw your attention to these three levels. First of all, we have a higher time frame significant level where we expect a reaction. So that's the low of this week, the week that formed around the 30th of July. That low there, when price gets there and reacts, something about that reaction gave us an entry. And we expected it to get to roughly the low of this candle here. So we have a significant level, we have a reaction, and our target is a liquidity profile. Remember those terms? Our target is a liquidity profile. So 1 second, let me just check. Can somebody check for me to make sure Damola is actually on here, not on Zoom? Damola, if you're here, please let me know in the comment section. Okay, so you guys, the package is good for money. Yes. It's worth every penny. Yes, it is. It is worth it. Yeah. So Damola, please let me know if you're here, and a couple of other people who showed up on Zoom. You should be here on YouTube. I'm sorry if that wasn't communicated. So this picture here on a daily chart, this is what it looks like on the hourly chart. This is what we traded that week or last week. It's important because you're going to see that a similar setup, good to see, Damola. A similar setup maybe, or some similar setups may be forming this week. Now, if you track the analysis on this channel, for some very advanced traders, you might have thought it was a bit basic. Yes, while we're giving it out for free, we're giving it at a pace that matches the students who are paying. So the rest of the world, you're getting this for free, but we're tailoring it to our students. Now, they've just taken the next step in the last few weeks, and so we're going to begin to add some more tools to the box as we go along. So with that in mind, with this picture in mind, these two pictures in mind, let's go to this week's charts. Now, first of all, let's go to the dollar index. Let's start from the weekly chart. I am not going to show all the levels of we've done this several times over the last few months. I'm just going to give you what I am looking at this week. First of all, you see that weekly low there? Let's put that in brown. That's my color for a weekly and a monthly chart levels. That is this week's significant level. The low of this week here was reacted to last week. What do we expect to happen? Secondly, if I draw out that level from there, one second, let's get rid of that. So this week all the way down here, this one here, right, is this long brown line. And as you can see, price has also reached there, but it's pretty much identical with the one from here. So I'm going to delete it, but rather than just delete this, you can see the low of this week as well here. We've had pretty much almost to the pipper reaction there. And there is another one here. So I want you to keep in mind what I just showed you, what we did last week. Now that was given in private, but we're doing the exact same concept here. Now this is the dollar index there. So that low, that low, that low. This one here is almost identical with this one. And then the final one of interest to me over the next, well, there's one there as well. And the final one of interest to me is that one. Now, they all look extremely similar, or close together, I should say, sorry, on a weekly chart. However, if you drop down to a 4-hour chart, you will see that these are significantly far apart. At the moment, they are what I call north side targets. So these are significant levels from a weekly chart to the north of where price is at the moment. Well, we might want to do the same the other way. If we come back down here, let's do the exact same. What weekly levels are beneath us? Well, there's one there. Another one. No, there's one there. There's another one there. Another one there. There's one there, which is pretty much the same as that one. So I'm just going to leave that out there. And finally, one down there. Again, they look all bunched up, but let's drop down to a daily chart. First of all, you see some space. If you go down to a 4-hour chart, even more. There you go. Why do I have them there? I expect some reactions at a couple of them. Now, that's what you should be doing on your charts to start the week. Now, I'm going to get rid of all of them and just put that first one back there. We've got here. And at the moment, we are seeing what could be a reaction. We go to a 4-hour chart. There you have it. Students, let me know, can you see that here we have a stop hunt? Or what it is a stop hunt now because the market structure break has already happened. We're going to put that in purple for 4-hour color. At that level, we have had a 4-hour stop hunt market structure break. Let me know if you can see that. SH stands for stop hunt. MSB stands for market structure break. Let me know in the comment section. Again, I understand that some of our bigger community that follow us on YouTube may not necessarily be up to date, although we have taught this in the free videos. But I want someone to let me know, can you see clearly a 4-hour stop hunt and market structure break at that level? Let me know if you can see it. Cool. Gerard can see it. Anybody else? Ivy can see it. Cool. All right. So let's drop down the 4-hour chart, a 1-hour chart. Can you see? I'm going to change the, well, I'm going to overlay the colors, that the stop hunt level was the high of Thursday. So we're going to put this in green. When we're talking about weekly highs and lows in our cadence, we use green for the highs and red for the lows. Let's make that real thick so it stands out. Can you see that that's the high of Thursday, which would make this the low? Let me know if you can see this loud and clear. Can you see it? Not hear it. Can you see it loud and clear? Cool. So this is why I took the time to show you last week. Not because I was boasting about the fact that we called it. I just want to remind you of the same process. Last week started with this picture. This chart that I sent out. You see there's a weekly low. Price gets to it on a 4-hour chart. Look, 4-hour chart there. And there is a stop hunt of this level on a market structure break of that level, as seen clearly by this. Can you see that the dollar index has just done the exact opposite of what UJ, the Jappy, did last week? Now, it doesn't necessarily mean we're going to get the trade. It just means that the scenario has been fulfilled. This is one of my personal, I've got 12 different trade models. And I'm going to teach all 12 of them to our students over the next year. This is one of them. I have 12 ways to milk the market for a trade. This is one of them. And on the dollar index chart, the exact same thing has just happened. On the 4-hour chart, that's the weekly level there. It's all the way back. So that's that level there is what I'm talking about. We've gotten to it here on this side. It's also, if we go to the weekly chart, let's put back one of those lines that I took out. It'll be this one. That one there. It's pretty much identical. Anyway. Let's move aside. So when you see significant higher time frame levels that give you institutional price reactions, they should get your attention. Doesn't mean you just jump in. For instance, that was a low that was swept. There was liquidity there. This is a level of what I would call rebalancing. I haven't taught you guys that yet. So it's not a high or low being swept because we're going back into a low that was swept before. We've come back to it. So there is a rebalancing of a market maker's order books. The same level at which there was a liquidity run one way is now being reversed the other way. Oh, sorry. I've moved the comment now. But we're here and we've seen the exact same profile. Also, on a daily chart, we have had my favorite daily reversal signal. Students, please let the good people of YouTube know what this is. What is this here? Don't let me down now. Don't embarrass me. Tell the people, what is this candlestick action here? What do we call it? What do we call this? What has this black candle done to this white candle? While I'm waiting for an answer, I'm going to get ready to write it once somebody gives it to me. It is a what? There's a little bit of a delay. Yep. Kieran, you get the prize. It is a bearish engulfing. So we're thinking like traders, right? We're institutional traders. We're not just throwing indicators and stochastics and all those other things. So we have a potential bearish signal on the dollar index. Again, it needs a little bit of confirmation. We can't just get in here. We need other things to. So yeah, let's see. Bearish engulfing, Kieran, that's right. Ivy engulfing, yep. Esther engulfing, yep. Gerard engulfing. It's engulfed it, yep. And I think what Monica meant was it's taking it out and it's created a directional bias. So I am walking into this week with a bearish bias on the dollar until it tells me otherwise. Let me repeat. I'm walking into this week with a bearish bias on the dollar till it tells me otherwise. Now, long term, I think the dollar is probably, at least, well, it's been bullish for a while and could end up being even further bullish. However, for now, this week, I'm eyeing it. 1 second. Yeah, Kieran, you're right. Yeah, there's always a star student in every class. You're right. I was actually going to come to that. So well spotted, mate. I'm actually quite proud of you for spotting that. That's exactly what I'm coming to next. So the dollar index is giving me a bullish bias, or bearish bias, sorry. And that for now is pretty much all I need from it. I think there's a good chance that we see this happen this week. Again, it's not set in stone. And if it doesn't happen, I don't want anybody messaging me and saying you were wrong, you're an idiot. No. We're forming a scenario, right? It has to be backed up. For instance, if you look at last week, when I showed it on the UJ, the JAPI, I didn't take a trade immediately I saw it. I waited for it to play its hand. So we said it is interesting. Let's go back and look at that. 1 second. Let's go back and look at that. Where were we? Here, right? Actually, let me show it to you. Sorry, we have a very funny we got a very funny group of people. We love each other and we have fun. So as you see here, you might not see it, but it says UJ is looking interesting. So all that does is tell you, pay attention, something interesting may be happening. That's all. So let's go back. So if we think that this is going to happen, the question then becomes, where are we likely to end up? Well, if you remember, let's look at this now. Let's go back to Telegram. This was how we anticipated what the weekly range would be. And we were right. We came within 5 pips of that level last week. And I think we filled it in already this week, or we will tomorrow or so. Each of the lines on that chart was on my chart from before the week began. I forgot to take the picture of it, but that's exactly what we were going for. And this is what it looked like on an hourly chart. So let's see if we can apply the same, think of this as a mathematics textbook. I've just shown you a worked example. Let's apply the exact same worked example to predict this week's price action, not just review last week's. So let's go to a daily chart. If price is coming down this week, where do we think it could potentially get to? Well, I have some ideas. I think that is potentially a level to look at. I also think this bears looking at too. However, they're quite close together. So I would suggest, and I'm going to just pick one. I'm going to man up and pick one, take that one off. At the moment, well, we can't measure this in pips because it's a dollar index. But, and then I'm going to draw this out here as well. So if I superimpose those lines to a 1 hour chart, there we have it. I think there's a very good chance that we see something like this happen. There's a level there. There's a so we had the high time frame level. We've had the bearish reaction. So we have a directional bias. We're not looking at potential objectives for the week. There's that. There's that. So there's that order block there. There's this order block here, just above this one here. There is this manipulation block there, which coincides with this one there. There's another manipulation block just here, that coincides with that there. And finally, who's to say that it doesn't come all the way down here? The truth is, we can't know for sure, but we can start to stalk. We have a bias, we have objectives, we have regions we expect to see some action. Now, let's apply this to the majors real quick. So now we're going to just do the exact same thing I've shown you on the dollar index, and I showed you from UJ last week on each of the majors. I might not do all 7 this evening because I am absolutely tired. I wasn't supposed to be teaching today. Today was supposed to be Talkback, so I wasn't planning to do this. I literally just come off a YouTube broadcast talking to a group of men about what it's like to be a man. And we all know, I'm sure the women know, that it's draining interacting with a man. Only joking. So let's see how far we go. Number 1, EU. Right, so that's EU there. Let's see. So can we see any of the same principles? Well, first of all, from a weekly chart there, we've just scaled that high. One second. Gonna put this in maroon. So we've scaled that one. We've also scaled that one. And we've even scaled that one as well. So this is the one that it respected. Look at that. As a trader, Tucker taught you guys this last week. Let me repeat. Yeah, Gerard, you and one of them, weren't you? It's crazy. Your first job is to be an analyst, right? This is how we function at Israel Keys Wealth. Your first job is to be an analyst, meaning look at the market and what's it likely to do. Your second job is to be a risk manager, meaning how do I make sure that I enter this trade responsibly, and then you become a trader. So let's be the analyst here. And you're looking for institutional price action. You don't care about what price does if you cannot explain it by bedrock price action principles. You ignore it. So here we have taken out that high. That's the high of a whole week. That's the high of an entire week. But it's also a weekly swing high. So first of all, it's the high of a week. This week was the high, but it's a swing high because there's a lower candle on one side and a lower candle on the other side. So there would have been a liquidity pool. Remember here. Let's put that in there. Somebody would have put a stop loss there or be looking to be a breakout trader there. Right? The market maker would have engineered a liquidity pool that will become a liquidity pool. There is a pool of liquidity there that will serve as a pool for price. And we got there. Look, we got there. And we saw a reaction. The reaction gave us an engulfing. So we had a weekly engulfing, which is a powerful symbol. And you guys remember I've been calling this reversal for about 4 weeks, but it kept hanging around. Well, last week was the week it went. Look at this. Boom. So the last 4 weeks I've been like, I'm expecting an EU short. I'm expecting an EU short, but it kept messing around. We had 2 doji weeks back to back that did my head in. Well, last week was the week. I caught it on the trade on Thursday and Friday that I showed you in the group. This is what was happening. It wasn't about any stochastic. It wasn't about any indicator. It wasn't about anything but bedrock price action. Well, we've taken out, so we've had the reversal we were looking for. And that's why I believe long-term EU is going to be bearish because of this. However, there is an inefficient, what we call a fair value gap, a liquidity void. This candle has run this week's low. So on that week, it's taken out this week's low, this week's low, this week's low, and this week's low, all the way down here in 1 week. And as you can see on the weekly chart, there's very little price action in between those two levels. Now, I don't have time to explain the philosophy behind it, but this is what we would usually expect. Something like this, a rebalancing of price, a rebalancing of a market maker's order books to reintroduce an efficiency. Even if this is supposed to go lower, I would like to see this. It's not compulsory, but I would like to see this. This is the scenario we talk about. You build a scenario, you wait for a signal, you take an entry based on a particular set of rules, and then you manage your trade. Where would this potentially come down to if it did that? Well, there's that level there. And there's this level. So there's that. Well, first of all, there's that one there. That's the first place I expect to see a significant reaction. And if it goes past there, we could see there. So we have from here to there, that's 91 pips. Okay. It's not as much as I thought it was. And then down there, 162 and whatever. Of course, we could see it go all the way up there into that level of liquidity, because this is an order block right here. So we're working with two liquidity profiles. If you're wondering why I'm drawing the order block up there, well, the wick is bigger than the body, so it's hiding an order block, as we've said several times in the group. We could see that as well. And then a drop. Of course, the market can do whatever it wants. It could just carry on going up and blow out that existing high, and it wouldn't owe us an apology. We're just framing high probability scenarios. High probability doesn't mean a certainty. So in essence, what I'm saying is I expect the week to open up by making an upward move first into a level, and then depends on how far it goes. For instance, this is where you start to apply principles of time, the principle of time. If this here is only 90 pips away, 97 pips away, the euro dollar could easily travel 97 pips in one day. That's easy. It could do double that in a day. And so if this is where the reaction is going to happen, then I expect us to get here sometime Tuesday or Wednesday and then a short. However, if it's doing this is almost 300 pips, then this would be for me a weekly objective. So this week is either going to travel between 90 to 120 pips up and then short, start coming down, or it's going to travel roughly about 300 pips, roughly in one direction. Well, let's go down to daily chart. What do we see on a daily chart? Let's get rid of these. Actually, let's do it the quick way. All right, so that would be the last few. Delete. And then this one here. Delete. So where's this I'm looking for? Let's try that. There we go. So this is a daily chart. Now, today is perilously close to an engulfing. It's not quite there yet. However, this is how you see an engulfing on a daily chart. I'm going to draw that line out there. That's the low of Thursday. I'm going to put that in red. That's a daily low. That's the low of Thursday. Now, remember our dollar index chart? Remember what it looked like on a daily chart? Look at that. Look at this again real quick for me, everybody. See that there? 3 candle formation. This is the high of Thursday that was taken out. And then price then reacted and has now taken out the low of Friday. The engulfing is complete on the dollar index. But as Kieran pointed out very astutely, it hasn't yet completed here. That's the low of Thursday. This would have been the high of Thursday. However, what we're really looking for is the high of the immediate previous day. So that didn't get there on Friday. We move it to here. It hasn't gotten there yet, but it's close. If this gets here over the next 24 hours, can you see, for me, everybody, that this, once that line is breached, now, okay, so today's closed, fine. So it's if you look at my clock here, it's 10 p.m. London time. That means the day has closed on my server. So I'm not going to move that there. I need, for this to work, for me to get a trade on EU, I need that green line breached over the next 24 hours or so. As you can see, we started in a new day. That's why that's happened. So if I go down to a 4-hour chart, I've had a potential stop hunt. Look at this there. A potential stop hunt. Potential. I haven't had a market structure break. The market structure break would be the last 4-hour high that drove price down into the stop hunt level. So let me show you. 1 second now. Let me show you some. I was doing some analysis on my own before coming up to you guys. 1 second. Where is that thing? Okay, I think I have lost it, which is painful. Oh, there we are. So that's the exact same pattern here. I want you to look at that real carefully. And while we're doing that, 1 second, see if I can find the pictures I took earlier today. Right. There we go. 1 second. There we are. No, that was UJ. Okay. That is, oh, that's the pound. Okay, yeah, I'll come to that in a second. Okay, that's the pound. That's fine. That's fine. Okay, let's go back here. I can't find that one. Cool. So, watching this very carefully. For me to be satisfied, for this to give me the security I need, I would want to see both the green line and the purple line violated. Of course, if the purple line goes, it means the green line's gone already. So, in essence, I want price to get to the purple line first. Somewhere above it here. And then dip back down into this area here. And then I begin to tee off on my objectives. So the first one would be here. And then we see what happens. Right? If price shows us a willingness to reverse, then we enjoy the ride. That would be somewhere. So if we take a trade, say, from here to there, 112 pips. Can I interest you in some of that? However, there is a chance that it does this. For instance, it comes up here. Back there. It could do this. It could do this. And then this. My next, so I probably would go, let me drop a few lines here. Come off the forward chart. There's that level. And there's that one. And there's that one. So somewhere, let's use this one for instance. Somewhere in that region. Or It could just from here just come up there into that area there. I have my idea as to what's going to happen, but I'm not going to give that out here. I'll talk to you guys about it, those of you in the private group, as the week goes along. But I have my hypothesis, but it's a feel. It's one of the things I spoke to you about how some things just come from experience. It's not necessarily black and white. But anyway, at the minimum, let me take a screenshot of that real quick. At a minimum, if we get above that purple line, which you see some kind of bullish trade, whether it's the whole or just the start of the week and then a short. And if it's the start of the week and a short, we will know because the exact same pattern will repeat itself on the downside. But on EU, that's what I'm watching. If that forms, and how will I know it's ripe? Well, let's assume the price ends up here. So let's assume it gets here and then reverses. Why would here be a good place? Well, again, this is how you project as a trader. You project. That's a nice order block level there, right? So that's why I'm putting, let's put that there. That would be textbook. Why? It would clean out this equal highs here. Look at this. The high of Friday and Thursday are pretty much equidistant. There is going to be liquidity here. And guarantee you. If you have a demo account, try this out. Just get in this trade now. Put your stop loss here. And put your take profit just above there. It wouldn't make any sense to trade it properly because you would be risking 21 pips to make 21. 1-to-1 is not something I would encourage. But try it out. Just open a demo account, a throwaway demo account, and just enter the trade right now. Or if it comes back down, wait for the next time it forms a 1 hour engulfing bullishly and set your target for just above this highs, for 3 pips above this highs. I'm willing to bet a car or watch something that over the next 1 day we're getting above these highs. May not be now, but that's too clean. There's a liquidity pool here that is going to be too enticing for a greedy market maker to turn down. Let's put it there. So the exact same words I put on the dollar index chart. Liquidity pool that will become a liquidity pool. It's a pool that will pool price. There. So let's assume that that is the level price gets to. Stop loss, Monica, would be 1641. 1.1641. Again, it's just a test. Just get in here real quick and set your take profit to just above these highs there and see if we get there before we take out this low. Or it could take out the low to generate liquidity and then push above there. Now, that's why I said it doesn't make sense to take the trade. I'm just pointing out to you that at some point over today or tomorrow or the day after, I expect price to get above there. Anyway, if that were to happen, let's assume we end up here. Well, what we would then do is we'd stick a fib from high to low all the way down there and look for a discount entry. Again, I'm just giving examples. An example of a good discount entry. Discount means anywhere from 38.2 and below. We're smart traders. We want to buy at a discount and sell at a premium. So Just giving, again, these are just arbitrary levels to make the point. I'm not saying that's exactly where it's going to turn. I do have some tools I could use to pretty much predict it to between 2 to 3 pips. But I ain't taught you guys that. I'm not going to do that. And again, I'm not trying to boast or be arrogant, obnoxious. So somewhere, we're indirectly saying somewhere in this region, again, if we did come here, somewhere in that region there, and perhaps all the way up to here. Somewhere in that region, but I'm going to just put it here for now. I'm going to be expecting tomorrow or the day after, if we first, this is the order in which it has to go. The order is important. What I want to see has to happen in this order. I've got to first go up, right? First go up. I have to go up before I come down. And then come down to this level there, somewhere there. And then take a trade and ride it all the way to at least there. At least there, maybe higher. Like I showed you, we could go up here and even further up. But at the very minimum here, I need to be able to frame a 3-to-1 or 4-to-1 risk to reward ratio trade with those parameters. Please let me know in the comment section if you get the gist of what I've just shown you. Some of you won't, actually. There's a couple of new people in, that's fine. But you get the general gist. Can you see how this is tying in with this on the dollar index? In essence, in this case, the dollar index is being a leading indicator. It's predicting what the other pairs with the dollar may do. Of course, if the dollar goes down, you expect the EU to go up. So that's what I'm looking at concerning EU. Now let's go to GU. So same principle, right? Same principle. The low there of that day or that week here. So that's the low of the week. This week's low is that line there. I am going to put it in maroon to make it obvious. So that's the low of a week that was taken out last week. That's what it looks like on a 4-hour chart. That's the low of the week that was taken out. And as you can see on GU, the reaction has already happened. So there's a liquidity pool there that I'm expecting to see. Now this is equal 4-hour highs. So I'm expecting to see if that reaches up there. In essence, this would be a stop hunt. You would expect the market structure break to form there. Again, predicting. It's not happened. Just projecting, to see if the scenario happens to lend credibility to our trade idea. Well, on a 1-hour chart, that's what it looks like. Price took out that low here. And then we see the reaction on a 1-hour chart. So today is Monday, so that's Friday. Now you guys remember that I gave you this on Thursday, but I said I would not enter this trade on Friday because it was bound to be a manipulation, and it happened. Let's see if I can find that here. Let's see if I can find it here. So, oh, now this isn't. Okay, so let me see. Okay, that was G that was pointing it out. Cool. So that's the reaction there. Look at that. So this was on, I believe, Thursday. Or was it? So saying, hey, this looks like something could be happening. This is what it looks like. Right? Same principle. Look at that. So this was my view Thursday night going into Friday. The exact same scenario. But I spotted it Thursday last week. As you can see, it's taken out the low of this day. And then on Thursday, so it took out, so this is Thursday, Wednesday, Tuesday. It took out Tuesday's low, and then on Thursday, took out Wednesday's high. I've oversimplified it. I've hidden something in there. Students, you know what I'm talking about. For those of you watching this for free, I've given you a clue as to what's really happening there. Go chew on that. That's a gift. So what do you see from the above? I asked the guys in the group. I suspect we may be seeing the same thing unfold in EU tomorrow. Now, that's EU from last week. What I just showed you in EU, we actually called that in the group last week in advance. Now I'm looking for something. So maybe we get GU tomorrow, but definitely EU won't be till next week if it does play out. Why? Because again, experience. I just knew Friday was going to be a manipulation. Fridays are prime days for market makers to do crazy things that violate rules to manipulate. So remember my suspicion from EU about yesterday in an even analysis? Well, so that green line is where I said I would like it to form. I said, guys, that low is going to go. That low is going to go because a market maker, first of all, wants to be dodgy. And it did. There we have it. So, and there we have it low. Well, how? Presence of another block just below price. It's Friday, New York. Things experience will bring you. Kieran, only you would do something like that. So, similar story on GUs. This is what I'm looking for. It's Friday, the end of the week, and the pair is due for manipulation. Manipulations override what should be textbook price action. So, Friday came back to take out that low there. And we knew they were primed for a move higher. I was hoping they'd wait till Tuesday because I don't trade Mondays. Right. Okay, no, I didn't post that. That's fine. And I hate when they do this. I absolutely hate when they do this because I was hoping this would wait till the Tuesday, but it happened on a Monday. That's fine. This would have been a great trade to take on a Tuesday, but it happened. Cool. In which case, well, just throw that fib on, high to low. Where is the discount? 38.2. That level there. Right? So we wait. Now, there's no guarantee it comes back to discount. It could just come back to the fair value area. What have I done? It could just come back to the fair value area, which is roughly around between 38.2 on one side and 61.8 on another side. In essence, it could be somewhere between here. The entire YouTube videos talking about this for free. Please go watch them. It could be in that region. I'd like to see it come here, at least to the blue line. So a dip down here, here, or here, somewhere, anywhere from here downwards is fine. So I'm just going to put that there. And then a rise to there as my first order of business. Why? Because of this liquidity pool. Look at that liquidity, right? So If that were to happen, again, this is just a scenario. We need to see signals form, entry patterns, like we've discussed, to take them. But if that were to happen, this would potentially be a 230 pip move. Again, can I interest you in some of that? So similar to this, let's look at this again real quick. Similar to this here, how before the week started, or at the start of the week, we spotted something. We drilled down deeper. We started marking out our levels. We drew a level at which to take action. In essence, if price dips beneath that line and then gives a bullish signal, we take it. One quick second. What was this? Oh, that was something else. We did take it. And we marked out in advance an exit point. And we came within 5 pips of that exit point. But I'd gotten out long before the exit point. Well, same thing we're going to apply here. So you have, what I'm showing you is you have to come into the week with a plan. You don't just take the first engulfing that happens here, the first market structure that happens there. There's a story price is telling. You are in sync with the story. You're expecting it to do something. It's like a bus. You go to a bus stop and you wait for the bus. The bus turns up, you get on. If it doesn't turn, and you know what direction you're going in. So you're taking the bus going in this direction at the bus stop and you wait for it there. And if the bus shows up there at the time it said it would, then it confirms to you that it's a valid journey and then you take it. I'm going to do one more. So of course, GU bullish, EU bullish, although those bullish signals could just, again, this, I'll give an example. So I should point this out. I am worried about that level though. And the fact that we've hit it already. So look at that. Look at that there. Look at the precision. Can you see that? I mean, 1 second. I'm trying to get this candle here. There. Ladies and gentlemen, if you can look at that and still think that the markets are random, I have a bridge in New Jersey to sell you. I've got a mountain in the Cheshire Hills or the Derby Dales in the UK to sell you. If you can't look at that and understand that there's high level precision engineering going on, can't help you. And so the fact that we fill that in already worries me. Because GU is moving mad, as the kids would say, with Brexit. And so I am not trading GU to this week. This move up here to that level was what I was sure about. This I would like to see. Hence, 1 second. Hence, you can see it is in question marks. It's done what I was sure about. This is a potential move. But I'm going to be looking at EU with a lot more certainty because it doesn't have the Brexit shenanigans going on. Let's do one more, UJ. So let's see, what do we expect from UJ after what happened last week? What was I doing with these lines? Let me try and remember now. Okay, yeah, cool. So that's the high of that week. It's been bullish. Now, we expect there to be an initial drop in the dollar. Or we would like to see that happen. So dollar's dropping, then you would expect this to drop too. Well, 1 second. Let me... Right, so if you're looking at this as a bearish move, you will see that there was a weekly bearish engulfing at that level. It was a weekly bearish engulfing at that level there. This candle engulfed this candle here. And of course, there was a rebalancing. And where would you expect the rebalancing to go to? Well, first of all, that would have been my first thought process. We haven't gotten there yet. We very well may. But definitely the high of this week here, I think, is something that's in play. And so here we have this here. So if you drop down, there you go, daily chart. Okay, so that's that there, and that's the high of that week there. So today did not take out Friday's high. The 4-hour chart, it's a lot clearer. Aha, now I understand why I drew those lines. Okay, it makes sense now why I drew those lines. So that's the high of last week. So my question is, what's going to give way first? That low on the 4-hour chart, or this high here? So I'm watching what gives way. Whichever of these two levels gives way first will give me a lot of confidence as to what's happening. But if you go down to one day chart, so at the moment, the last potential stop point would have been that level there. If we are making a case for a bearish move, if that should be green, that's a high, then we've taken out that day there into that high. That high has been respected here. So this one, even if it's 1 pip away, this high here is lower than that one. And so this is still the controlling high of the range. Go back down, put the dividers in which case we would have first expected that low to go. That hasn't happened. And so the next low, now that we are into Tuesday, we are now concerned with Monday's low. No trade unless this happens. So unless that happens. In which case we would then draw a fib. So let's assume price came down to here, this level there. We would then expect a Fibonacci retracement back. So first of all, let's put that level out. Let's assume it was here. This is the last one, guys. We're going to go after this, all right? Give me 2 more minutes. So if that were to happen, we'd go from high to low. Now, since we're selling, we want a premium. That would be from 61.8. Now, it could happen again in the fair value range. This is the fair value range here. Go look at the videos on using Fibonacci correctly in this channel. But we would ideally like it to get all the way up to there. Come on, MetaTrader, not today. Not today. Thank you. Oh, it's up there already. Okay. Could be here, but we'd ideally like it to get back to there and then to drop. And then to drop. So that's what this scenario would call for on UJ. Of course, if this high gets taken out, all bets are off. In which case, it would then just become a continuation of this Fibonacci move further upwards. And then we would reassess. Okay, guys, my eyelids are closing. I know I put a little bit more out there for you to think about in these analysis sessions than normal. So we're stretching your brains a little bit now. A few more concepts, a little bit higher and deeper. Go back and watch this over and over and over again. Ask questions. For those of you who want to know, how can I get behind the scenes? How can I get in the program? Well, I'm glad you asked. Send an email to israelkeysgroup@gmail.com. Actually, I should change that one quick second. That is, well, we'd still get that, but we got a new email box. One quick second. It's, what have I done? So it's inquiries. How do you spell inquiries again? I'm so tired. Inquiries, I believe that's correct. Forgive me if I misspelled it. Just correct it. My eyelids are shutting. Inquiries at israelkeyswealth.com. And there we have it. So let us know, hey, you like some information as to how you can get in the program. Or you can send a Telegram or WhatsApp to that number. Telegram or WhatsApp to that number. What would it cost you? Well, the huge price, the huge price of $89.99, which some of you lose in one. Some of you are already losing per trade anyway. So for the price of a loss, you could save yourself from losing. We'd like to welcome you into the family and get you on your way towards trading with confidence and institutionally. All right, registered students, please make sure that you're watching Telegram for signals and announcements all week. If you haven't already, make sure your Telegram is set to deliver notifications. See you guys later on this week. It's been live. Please, before you go, do us a favor. Like this video, share it, comment, and subscribe. It's free. It doesn't cost you anything. It'll be a great help and some feedback as well. Also, give us feedback on how you felt or how you feel the concepts you're learning apply, and give us some success stories. A couple of people have reached out to me privately to say thank you for the content, the free content. I mean, it's taken my trading to the next level. Shown me a couple of results. I'm so excited to hear about that. Please let's know, more and more of you, how this is being a blessing. All right, guys, so part of the script. When I say bye, have a good evening, good week, all the best with your trading. Take care. Bye-bye.